So the housing inventory in San Antonio and the surrounding cities and counties just reached levels we haven't seen since 2008 in the Great Recession. So this video is going to show you through charts and statistics what's going on right now in our market with housing inventory, with interest rates, and what some of the opportunities and disadvantages are right now. If you stay to the end, I will tell you what I believe the opportunities for buyers and sellers are, a window of opportunity that we have right now that may actually be closing. So my name is Kathy Nizer. I'm a realtor. I've been a realtor here since 2005. So I've seen all kinds of markets. All my contact information is down below. But if this is your first time to the My San Antonio Move channel, be sure you hit subscribe and then ring that bell so you can be the first to hear about the market updates in and around San Antonio. So now I'm going to be sharing some charts with you, and I want to begin with the number of sales and the average sales price over time in our area. So this is specifically San Antonio, New Braunfels, all the surrounding areas, this whole metropolitan area, and just this area. So let me share my screen. So here you have a chart where the blue lines are actually the sales each year from 1990 through 2024. Now 2025 is going to come in just a little bit lower than 2024 was. However, the gold line is the average price each year set through the same years. Now, if you notice, in 2002, the average price of a home here was $131,500. That's very low considering where we are now, which is just below, right around $350,000 for the average price. I want to point out a couple of things. In the number of sales each year over time, you see there was a big boom in 2005 and 6, 4, 5, and 6, that then went down during the Great Recession. So this was when the market got crazy and loans are being sold on Wall Street. I call it the Wild Wild West. There was just all kind of craziness going on during that time. The next kind of boom actually happened during COVID, 2020, 2021. I'll talk more about that later. After COVID, then the market went down kind of to where it was. And now it's gone just a little bit lower in terms of sales. However, if you look at the sales before COVID, around 2018 and 19, we're not far from there right now. Now look at the average price as it's kind of gone up. Even during the Great Recession, it went up slightly and now then continued. But right here during COVID, it just jumped up. And so that was just a huge spike in home sale prices during COVID that was artificially produced by a number of things. But right here, if we would have kept on at this same rate, we would have actually been lower in price than we are right now. If you can imagine that line just continuing on. So we're really not in that bad of shape when you look at the fact that there was an anomaly that happened during COVID. And if you took that away from the situation, we'd be about where we are. So let's talk about housing inventory. What does that mean anyway? So whatever the number of houses are that are on the market today, if we look at the rate they're selling, how many are selling each month, and we divide the number that are on the market by how many are selling each month, we'll get how many months it would take to sell all the houses that are on the market if nothing new came on. So that's interesting because it actually tells us the health of the market and the dynamics of the market. So I'm going to show you a chart now with the housing inventory over time. And this again is our area, San Antonio and New Braunfels Metroplex. This information is actually from the Texas A&M Real Estate Research Center, which is the most up-to-date long-term statistics on our market. And this goes from 1993, and I have it actually going now through the end of this year, 2025, so you could get a real perspective of where we are. But in 1993, we were in an 8-month inventory. And then in 1996, it went up above a 10-month inventory, almost 11-month inventory. This is 10 and a half months. Then it came right back down. So the things that were going on in this time period are the savings and loan crisis that happened in the early 90s, and then the dot-com boom happened as well, and then the reverse of that when that went away. Now in 1999, it went down to a pretty stable market in about a 4 or 5 month inventory. In 2004 and 5 and 6, this is where the inventory went way down. That means people were buying them at such a fast rate. From California, all other states, but a lot from California. Investors are coming in and buying houses sight unseen, neighborhoods sight unseen. So it was very competitive, very fast market. Regular homeowner buyers had a hard time keeping up and competing with those cash offers. That's what the low inventory did. But what that also created with the crazy financing that was going at the time, people were getting loans if they didn't even have a job, or they could breathe on a mirror. They got the loan, they showed they were alive. But that was some very risky situations. So then when life happened, they were often overfinanced in those loans, and they couldn't sell for what the market was. That created a lot of foreclosures. So we had crazy wild lending, which created a lot of foreclosures, and then the inventory went up here in 2008, 9, and 10. This is the Great Recession. Banks were shutting down, Fannie Mae and Freddie Mac shut down. It was just a really bad time in the mortgage industry, and things restructured a lot. But the heavy inventory happened because there were so many foreclosures. But a different phenomenon happened in 2011, where big corporations started buying those foreclosures in bulk from the banks directly. Normally the banks would foreclose, and then they'd list those properties with a realtor, and they'd be on the regular multiple listing service. Now, starting in 2011, corporations started buying those from the banks before they ever went on the multiple listing service. So the inventory dropped because of the lack of foreclosures being out on the market. And as lending practices got better and more conventional and more regulated, then the number of foreclosures went down too. So here we can see in 2011, the inventory went down to 6.5. 2012, this is a 5-month inventory. So again, all those foreclosures came off the market. Here, we enjoyed what we call about a 3-month inventory, 3 to 4 month inventory. We like that. We're kind of addicted to that. That happened so many years, from really 2013 all the way to 2019, and people started thinking that's the way it is. But then COVID happened, and lots of people didn't want to sell their houses in COVID. In the beginning of COVID, we didn't know what it was or how bad it was. People didn't want strangers in their house. They wanted to hunker down and move. Lots of buyers were buying because they wanted to get out of apartments, or they wanted a house that fit for them more to work from home from. So lots of buyers, way less listings. This is a 1-month inventory. It's even more aggressive than this boom that we had here. Down there, buyers had to pay crazy money for properties. They had to pay way above asking price, and they had to pay above appraisal out of their own money. So if you weren't a cash buyer, or you didn't have a lot of extra cash to throw at a house, you didn't have much of a chance at all in buying, even though interest rates were pretty good at that time. Then, as soon as the world opened back up in COVID, the inventory went right back to where it was. But a unique phenomenon happened after that. In 2023, 24, 25, this is at the beginning of 2025, we had a 6-month inventory, January of a year ago. And this is last month in 2025, November 2025, and that's a 7-month inventory, 7.3. Almost exactly what it is here, 7.5, 7.1. So this inventory is a decade history making inventory, but the reasons are different. Now it's not that there are a million foreclosures on the market, it's a number of other dynamics that happened from a low inventory. So unshare my screen and talk about some of the things that did happen. Before, I want to say that inventory in different municipalities around San Antonio is a little bit different. For instance, the Bexar County inventory right now is 6.7 months. In Comal County, where there's a lot of new builds, the inventory is 8.5 months. In Guadalupe County, still a lot of builder inventory, 7.7 months, so higher than Bexar County. In Kendall County, Bernie, Fair Oaks Ranch, those, it's very much like Bexar County. It's 6.8 months, whereas Bexar County is 6.7. So the different municipalities around San Antonio have slightly different inventories. But let's look right now at our market month by month to see what has happened in the San Antonio Multiple Listing Service, which is all of those municipalities together. So this is a chart of the month by month inventory for the San Antonio Multiple Listing Service. And this starts in 2017. If you notice, this is a year, okay? And the inventory goes up and down, and in the spring and summer, there are more on the market. So the blue lines are the houses that are on the market. So again, spring and summer, there are more houses on the market. The red lines are the houses that are actually selling, the number of buyers selling. So if you notice, there are more buyers buying in spring and summer too. In fact, it goes up and down at about the same rate the listings do. So lots of people think, well, the market gets really busy in the spring, or that's a better time to buy or sell. That's not necessarily true. Normally in a year's cycle, the inventory is the same from in January that it is in May and June in terms of the number on the market and the number selling. So yes, do more houses sell? Yes, but there's also more buyer competition against each other in that time, so it's fiercer. And yes, there are more seller competition because there are more listings on the market. So just because there are more selling doesn't mean that's a better market to buy or sell in. It's actually pretty equal usually throughout the year. Now, if we look here, 2017, 2018, and 2019, we repeated this same pattern. On the previous chart I used to have from 2007 to 2017-ish, that pattern was the same once the Great Recession is over. And so this is very normal. Like I said before, we're kind of addicted to it. In 2020, the inventory went down. That was when COVID happened. If you notice, this is March right here, and then May. So we started going drastically down as we got into the COVID experience. 2021, 2022, that was where the monthly inventory was a 1 month inventory. Just not a lot of houses on the market and buyers scooping them up. If you notice, in these 2 months, the buyers increased. So it's still the same pattern, but the buyers did increase. Now, when COVID was over again, the market went back and again had that cycle. Same thing here with the buyers. But in 2023 and 2024 and 2025, the market went up considerably in inventory. Still had that same yearly pattern. Well, one of the interesting things to note is that buyers never stopped buying. In fact, they kept buying at almost the same rate, except a little bit of increase during COVID. So high interest rates has not changed the amount of buyers buying. Buyers are still buying, and houses are still selling. The problem is there are so many houses on the market. That creates a unique situation, and in some cases an opportunity right now. Let's talk about interest rate. The interest rates towards the end of 2025 were somewhere around 6, almost slightly above. I know I have a buyer under contract right now at 5.99. And so that's kind of where we are. If you have really good credit, good steady income, and you're doing a conventional, what we call QM, qualified mortgage, means it follows the standard models. And you might even pay a little bit to get the points down, which my buyers did. Now, that is likely to change a little in 2026. If interest rates come down some, that will stimulate more buyer activity, which means more buyer competition. So buyers who right now Winter buyers are very serious buyers. They're not just the looky-loos. They're seriously thinking about buying and wanting to buy. These buyers actually have more opportunity and a window of opportunity that could be closing soon if interest rates do go down. So in the spring, if interest rates go down and there are more buyers naturally on the market, and there are more buyers because interest rates are gone down, now buyers are having to compete and make higher offers than they are right now. And they may not be able to get as many incentives. Sellers that are selling in the winter are usually the serious ones too, and selling prices have gone down some. However, if interest rates go down, and already more houses come on the market in the spring, more sellers will think, hey, it's a time for me to sell now because interest rates came down. So even more houses will come on the market. And so the sellers that are selling in the spring and summer will have more competition. It will be tougher for them in the spring and summer if interest rates go down than it is right now. So again, prices could go up more because there's more buyer competition, but there's more seller competition. So one of the things that's created an opportunity and a problem in this market is the huge builder inventory and builder incentives. So right now, builder incentives are putting pressure on regular homeowners because the builders are offering a lot of things. They're paying almost all the closing costs. They're giving upgrades like crazy. They're paying realtor bonuses. And many of them are doing a 2-1 buy down, offering a 2-1 buy down for the buyer's interest rates. Here's what that means. In a 2-1 buy down, the first year of the mortgage, the buyer gets an interest rate that's 2% lower than it is right now. And then the second year, it gets an interest rate that's 1% lower than it is right now. In the third year, it goes back to the interest rate it is right now, which it would have been anyway. In the process, though, it just saved them some money. And the buyer paying, or the builder paying for that, offered that opportunity to the buyer. It's actually a pretty good deal. One of the things that is cool about it is that anywhere in there, the buyer can refinance the loan if interest rates actually normally do drop, and they want that longer interest rate over time. So let's give an example of what that means. If interest rates were 6%, in the first year of the mortgage, the buyer would get a 4% interest rate. That's a huge savings in that year. In the second year, they get a 5% interest rate. And then the third year, they'd go back to 6% if they didn't refinance somewhere in there, which if they had just bought it normally, it would have been the 6% all along. So that opportunity for buyers that builders are offering makes it much harder for sellers to sell. And so sellers who, with this decade high inventory, home sellers need to know they need to have their property in tip-top condition. Go ahead and paint it inside and out, change the flooring, update what you can, and then price it aggressively. That doesn't mean aggressively high. That means aggressively to get that buyer. And know that you are going to be paying more than likely, unless you get a multiple offer in the first week or so, you are more than likely going to be paying closing cost assistance to the buyers. The average closing cost assistance to buyers right now is $9,000. That means some are offering way more, some are paying way less. That means a seller, out of the proceeds, pays some of the buyer's fees because it is a buyer's market. So right now, if a home is priced really well, really aggressively, maybe even below what the price should be, we are still seeing multiple offers. But again, the competition for that could increase as the number of sellers increase in the spring and summer. Buyers right now want diamonds or deals. And if they get a diamond that's been very nicely updated, they don't want to pay a real high price for it. So this isn't the market for every seller. This isn't the time to say, let's just put our home on the market, because it's not working. This is a market for people who either need to sell, they're they don't want that house anymore, or maybe they inherited it, they don't want to carry it. And it's a market for people who have a reason to sell and people who want to sell and buy. Because if people want to sell and buy and they sell, they lose a little bit on the selling side. Prices are a little bit more reduced and they're paying closing costs, but they reap the benefits on the buying side. So kind of a wash. So right now, there are kind of opportunities for sellers and buyers. And I think a window of opportunity that may be closing some, especially if interest rates do go down. Now, most people think, well, the opportunity is going to be there when interest rates go down. Actually, it's there now. So sellers right now have an opportunity because there are less homes for sale in the winter than in the spring. There just are. And if they get their home prepared correctly and they price it aggressively and position it aggressively, they can sell with less competition with other sellers. Some smart sellers are actually offering a 2-1 buy down to the buyer. Now we know that sellers are going to pay closing costs likely anyway of the buyer. Why not offer some of that closing cost assistance to be in the form of a 2-1 buy down with a preferred lender? So your realtor should have all these tools in their belt to talk with you about. So the opportunity for buyers is you could actually work with a lender that does a 2-1 buy down, ask the seller to pay for that in your closing costs, and get some more closing cost assistance. And then you don't have to compete against so many other buyers, because if interest rates do go down and there are naturally more buyers in the spring, you have a lot of competition. You're not going to get the same price or the same kind of incentives. The other opportunity that's there for buyers is builders. It's a real opportunity. And so I have a couple of points of advice about that. If you're working with a builder and want to go to a builder, then take an agent who really understands incentives and how they work, who can ask what the incentives are and then ask for more and kind of lobby on your behalf. That's what an agent does with a realtor, with a builder. But they also watch things throughout the transaction and protect you and make sure the builder's doing what they're supposed to be doing. Because they don't always. The builder, nice as that person is at the sales office, they represent the builder, the seller. Their job is to sell that home. It's not to tell you the truth. And unfortunately, they don't have real estate licenses most of the time, those builder salespeople. And they're not bound by the same laws to tell the truth and be honest. The other thing to remember about builders is sellers. Very rarely do people say, I want to buy in that neighborhood. Very rarely anymore. Only that neighborhood. That's where I want to be. They don't say that. They say, I want to buy over there. And that means you have to be competitive with pricing over there, not just your little neighborhood. And that includes builders. And that includes the incentives that builders are offering. So if you're saying, well, we don't want to give those closing costs, okay, don't sell. And we don't want to come down on our price, or we don't want to be aggressive with our price, okay, don't sell. Because that's the market we're in. So you have options, you get to choose. You need to work with somebody who understands those options. The other thing that's going to affect us in 2026 is the midterm elections. What's going to happen is that in the summer, the politicians who are in power will start wanting to increase the economy, improve the economy, have special programs so that they get to stay in power. So there may be new programs that come out at that time. There's talk about a 50-year mortgage. That would change things. There's talk about a portable mortgage. That would change a lot of things. And so there could be all kinds of things, certain kinds of incentives and programs that come out in the summer. The same thing happens when those happen as when interest rates go down. It stimulates more activity, which stimulates more competition. So the main thing, if you're thinking about buying or selling anywhere in 2026, it would be good to meet, whether you're buying or selling or both, meet with me and let's have a strategy meeting. That's more not what you're looking for in a house, but what is the strategy that's going to work for you. Interest rates and timing are important, but it's also important that you get a house where you want, with what you want, the kind of community that you want. You want a house that's not going to have a lot of problems and that's in an area that's really aggressively growing in terms of prices and has been an area of value for quite some time. Again, I'm Kathy Nizer. If this is your first time to the channel, be sure to like and subscribe us. My team and I love helping people move to San Antonio and in and around San Antonio because we know this area, we know the market, the suburbs, all of it, because we've done this so long. And so that strategy meeting with you, we can have it. Now, I've got some related videos down in the comments about North Central San Antonio, Northwest San Antonio, some other interesting information that you can click on and watch easily. But all my contact information is down there. Let's set a time to meet. You can actually set a Zoom meeting right on my contact information. And let's strategize for you. I hope this, I know it has to have been important and valuable because this is the truth of what's going on and very few people are talking about it. And so this video is gonna really help you, and I'm glad and thankful that you watched it. I'm Kathy Nizer, and I hope to see you around town.